It's January 2026, and the financial world is facing a tidal wave like never before. Gold has just surged to an eye-popping $5,300 per ounce, and silver isn't far behind at $115 per ounce. These aren't just numbers on a screen, they are the unmistakable signs that the inflation tsunami we have been warned about has officially arrived. For years, economists and investors have talked about rising inflation, but now it's here, hitting everything from groceries to gas prices and shaking the very foundation of our economy. Precious metals like gold and silver have always been the go-to safe havens during times of inflation, and their explosive price jumps are screaming one thing: your money is losing value fast. This isn't a distant threat, it's happening right now and the clock is ticking. If you're not paying attention, you risk getting swept away by this wave. In the next few minutes, we'll break down what's driving this inflation surge, why gold and silver are soaring, and most importantly, what you can do to protect yourself and your wealth before it's too late. Before we dive in, make sure to hit that subscribe button like this video, and share it with your friends who need to hear this. And don't forget to drop your thoughts in the comments below. I want to know how you are preparing for this inflation tsunami. Inflation is a word you've probably heard a lot lately, but what does it really mean? Simply put, inflation is when the prices of goods and services go up over time. When inflation happens, your money doesn't stretch as far as it used to. You need more dollars to buy the same things. Why does inflation happen? There are a few common reasons. One big cause is when there's more money chasing the same amount of goods. Imagine a small town with only 100 apples, but suddenly everyone has twice as much money to spend. The price of apples will go up because more people want them, but there aren't more apples to go around. That's inflation. Another reason is when the cost to make things goes up. For example, if the price of fuel or raw materials rises, companies have to pay more to produce goods. They often pass those costs on to you, the consumer, by raising prices. Inflation affects everyday life in many ways. You might notice your grocery bill getting bigger or gas prices climbing at the pump. Even things like rent, utilities, and healthcare can become more expensive. For families on fixed incomes or those saving for the future, inflation can make it harder to keep up. Think about it like this. If you saved $100 last year, but inflation was 10%, that $100 now only buys what $90 used to buy. Over time, if your income doesn't keep up with inflation, your purchasing power shrinks. Understanding inflation is important because it impacts your wallet every day. And that's why many people turn to things like gold and silver to protect their money when prices are rising. Gold and silver have been trusted as safe havens for thousands of years, especially during times of inflation. But why exactly are these precious metals considered the go-to hedge when prices start rising? First, gold and silver are real, tangible assets. Unlike paper money, which governments can print more of, precious metals have a limited supply. This scarcity means they hold value even when the purchasing power of cash declines. When inflation pushes prices up, the value of paper currency falls, but gold and silver tend to keep pace or even increase in value, protecting your wealth. Second, precious metals are universally recognized stores of value. People around the world trust gold and silver to preserve wealth, especially when economic uncertainty or currency devaluation looms. This trust drives demand, pushing prices higher during inflationary periods. Now, why are gold and silver prices rising so sharply right now? Several factors are at play. Governments and central banks have been printing massive amounts of money to stimulate economies, especially after recent global crises. This flood of money increases inflation risk, making investors flock to precious metals as a hedge. Additionally, geopolitical tensions, supply chain disruptions, and rising energy costs are fueling inflation fears. Investors see gold and silver as safe bets amid this uncertainty. Silver, in particular, is also benefiting from its industrial uses in technology, solar panels, and electric vehicles. As demand for these technologies grows, silver's price is pushed up not just by inflation, but by real-world consumption. In short, gold and silver rise during inflation because they protect against the loss of purchasing power and offer a safe, tangible asset in uncertain times. With inflation fears mounting, it's no surprise these metals are soaring now. Inflation isn't a T happening in a vacuum. It's the result of a mix of economic data, government actions, and global events that are pushing prices higher across the board. Let's break down what's fueling this inflation tsunami right now. First, recent economic data shows that consumer prices are rising at rates not seen in decades. The Consumer Price Index, CPI, which measures the average change in prices paid by consumers, has been climbing steadily, with annual inflation rates hitting 7% or more in many parts of the US. This means everyday items like food, gas, and housing are costing significantly more than just a year ago. Government policies have played a big role too. In response to economic slowdowns and crises, the Federal Reserve and Congress have pumped trillions of dollars into the economy through stimulus packages and low interest rates. While these measures helped avoid deeper recessions, they also increased the money supply dramatically. More money chasing the same goods naturally pushes prices up. On the global stage, supply chain disruptions have made things worse. The pandemic, labor shortages, and shipping delays have slowed the flow of goods, causing shortages and bottlenecks. When products are scarce, prices rise. For example, semiconductor shortages have driven up costs for electronics and cars. Energy prices have also surged due to geopolitical tensions and production cuts by major oil producers. Higher fuel costs ripple through the economy, increasing transportation and manufacturing expenses, which businesses pass on to consumers. Additionally, ongoing conflicts and trade tensions like the US-China trade war add uncertainty and volatility to markets, making businesses and investors wary and often leading to price increases as a hedge against risk. All these factors combine to create a perfect storm for inflation. It's not just one thing, but a series of interconnected events and policies driving prices higher, making precious metals like gold and silver attractive as safe havens. Inflation affects everyone, but not all in the same way. Some people and groups benefit from rising prices, while others suffer. Understanding who wins and who loses can help you navigate this challenging economic environment. Investors in assets like gold, silver, real estate, and stocks often benefit from inflation. These assets tend to increase in value as prices rise, helping investors protect and grow their wealth. Precious metals, in particular, are seen as a hedge against inflation because they hold intrinsic value. Investors who own these assets can see their portfolios keep pace with or even outgrow inflation. On the other hand, savers usually suffer during inflationary periods. If you keep your money in a regular savings account or cash, inflation erodes its purchasing power. For example, if inflation is 7%, your $1,000 today will only buy what $930 could a year ago. Unless your savings earn interest rates higher than inflation, which is rare, your money loses value over time. Workers face mixed outcomes. Those with strong bargaining power or inflation-adjusted wages may keep up with rising prices. But many workers, especially in lower-paying jobs, find their wages lag behind inflation, reducing their real income and buying power. This squeeze can make everyday expenses harder to afford. Businesses also experience inflation isn't just a headline, it directly impacts your everyday life by eroding your purchasing power. Simply put, purchasing power is how much your money can buy. When inflation rises, the value of your dollars falls, meaning you need more money to buy the same goods and services. For example, if a loaf of bread cost $2 last year and inflation is 7%, that same loaf now costs about $2.14. Over time, these small increases add up, making everything from groceries and gas to rent and healthcare more expensive. If your income doesn't keep pace with inflation, your standard of living can decline even if you're earning the same amount. This erosion of purchasing power is especially tough on people who rely on fixed incomes or cash savings. Money sitting in a bank account earning little to no interest loses value every day. That's why protecting your wealth has never been more important. Precious metals like gold and silver have historically been reliable hedges against inflation because they tend to hold their value or even increase when currencies weaken. Investing in these tangible assets can help preserve your purchasing power and provide a safety net during turbulent economic times. Beyond precious metals, diversifying your investments and considering assets that tend to outperform during inflationary periods can also help shield your wealth. In today's economic climate, where inflation is surging and prices are rising rapidly, taking proactive steps to protect your money isn't just smart, it's essential. The longer you wait, the more your purchasing power erodes, making it harder to maintain your financial security. With inflation rising and precious metals like gold and silver soaring, many investors are wondering how to protect their wealth and take advantage of this trend. Here's some straightforward advice to help you get started. First, consider buying physical precious metals such as gold and silver coins or bars. Physical metals are tangible assets that you can hold, store, and sell without relying on financial institutions. They have a long history of preserving value during inflationary times. When purchasing, make sure to buy from reputable dealers and consider secure storage options, whether at home or through professional vault services. If physical metals aren't an option, you can invest in precious metals ETFs or mutual funds. These funds track the price of gold or silver and offer easy access without the need to store physical metal. However, keep in mind that ETFs represent paper assets and may not always perfectly track physical prices. Diversification is key. Alongside precious metals, look into other inflation hedges like real estate, commodities, and Treasury inflation-protected securities, TIPS. Real estate often appreciates with inflation, while commodities like oil and agricultural products tend to rise in price as well. TIPS are government bonds specifically designed to protect against inflation. Avoid putting all your money into one asset class. A balanced portfolio that includes inflation hedges can help reduce risk and improve long-term returns. Finally, stay informed. Inflation in markets can be unpredictable, so keep an eye on economic news and adjust your strategy as needed. In short, protecting your wealth during inflation means owning tangible assets, diversifying wisely, and staying proactive. Start small if you need to, but start now because inflation isn't waiting. To wrap things up, gold hitting $5,300 and silver soaring to 115 are now just numbers. They were clear signs that the inflation tsunami is here. Inflation is eroding your purchasing power, making everyday expenses rise and threatening your financial security. Precious metals like gold and silver have always been trusted hedges during these times, and right now they're soaring because investors are rushing to protect their wealth. If you haven't started positioning yourself yet, the time is now. Whether it's physical metals, ETFs, or other inflation hedges, taking action today can help safeguard your money from losing value tomorrow. I want to hear from you. How are you preparing for this inflation wave? Drop your thoughts and questions in the comments below. If you found this video helpful, please like it, share it with your friends, and don't forget to subscribe for more updates and insights. Your engagement helps us bring you the latest and most important financial news. Thanks for watching, and stay tuned for more.